Okay, hi there traders. Even as a few more people start to drift in. Hope we're doing well. Hope we had a good weekend. Just watching this Hang Seng. Strange price action sometimes, but anyway. All right, we'll get into it. Just let me know if I'm coming out through loud and clear. Pretty sure I'm all good. If not, I'll just sit back and have some coffee. G'day, Pete. All right, John Murray. Good, good, fantastic. All right, guys, we'll get up and running. Welcome to Trade Setup. It's a live stream. It is the 10th of August. So um, Friday night, we had payrolls coming out better than expected, which sort of threw a spanner in the works for the US dollar, and obviously gold being linked to the US dollar. And if you're sort of arguing that it's not, just look at the movements on both. Um, Gold unwound pretty quickly, and it opened up this morning and then sold off a bit, and it's been bought back up again. So actually, where is it now? Gold. So it's only down. It's down $4 at the moment. So that's a 5 minute. Don't worry about that. This action here. So I'm sort of looking at this zone through here to see if they can hold up longer term. If you'll see, yep, there you go. So you got some consolidation through there, a holding pattern, and then it started to rally from down around 1794. It just took off, held again up here, and it's just potentially we could go in a bit of a holding pattern, but we'll wait and see. Apparently, I mean, many expected there's more downside to come on the US dollar because, well, Trump has just, I think he signed something. Don't know what you call it to basically scout around Congress and to get some sort of stimulus going. And I think he knows that that's going to help, with the markets, help buoy it. And he's not so much worried about the US dollar. Well, he likes it lower as well. So it's kind of like, well, he signed something into effect. There could be some law, what do you call it, legal issues with it. But even if it goes to court, then that's going to take months to go. So I think the stimulus is, and look, it probably doesn't seem so bad in all honesty. I mean, it's $400 apart from six as opposed to six, and what is it, tax pause, but that's not for it's payroll tax, not income. So it's going to help your corporate as well to get back in there. So that's probably going to be a bit of a boost for the stock market. And we did see the stock market was down for most of the session. That bounced into the close the last couple of hours. So whether there's someone that knew something, I don't know. But either way, it was looking a bit heavy, and I think that was mainly to do with what the US dollar was doing um, during the session, just finding some buyers, and there's a lot of sellers stacked up on the US dollar, like all-time highs, really. A lot of sellers stacked up on the US dollar that could get squeezed out, but I think something fundamentally is going to change, and I think that's only going to come when they stop the stimulus to weaken. The more they talk about stimulus, the more it's going to weaken that US dollar. But maybe now, because there's less funds, I guess, going is going to pressure the US dollar, then, or less than expected from the 6 to 400 payments. It may look at it's at 92.50 level on the index that I'm watching, which we'll talk about soon. Oh, interesting time. So that was over the weekend, wasn't it? Yeah, Saturday I think he signed that in, and the market's opened up, and it's actually quite positive today, kind of buoyant. Just looking for the stimulus rally to continue on up. So we had I didn't actually send out any alerts on this, but we've just been looking at. So this is what. Let me just go over to here. So the intraday stuff. Bit of action on the intraday markets. Didn't really do anything on the Nikkei. I didn't. Wasn't really looking at that. It's a bit of a chop fest to me on this thing at the moment. It washes out levels and goes. So it's kind of these little minor levels you have to watch, and that's probably coincides to what the Hang Seng was doing at that time. Um, That's not right. Yeah, it's probably coincides with that little rally in the Hang Seng, which is good. The Dow, this is sort of the action we're looking at, the buoy off this longer term MA to pick up. I mean, it could have, there was off chance that it was going to flush everyone out, flush a lot more people out back down to the support. But I think with that stimulus news and what happened over the weekend with Trump signing that into effect, it was going to be buoyant. You would have expected the market to be fairly buoyant. And we've got this little sort of chop around here, and it started to lift. And that's along with the ASX. ASX played out the plan, but unfortunately, I'm just sorry for anyone that watches those alerts. Couldn't get anything out there quick enough. Just we've got lockdown, so trying to teach the kids and do all this at the same time makes it very tough. But anyway, we'll get there. We'll get there. So you've got this kind of chop, and that's just so we're sort of on the same page of what we'd be looking at. I like these longer term MAs, and you're looking at the swings, the shorter ones. So I've gone to using a hull. I used to use a 20 and a 50 EMA, exponential EMA, and you're basically looking for it to bounce off the moving averages. I think this is a weighted moving average, the longer term. It's a 150 thereabouts. Moving average, weighted moving average, yeah, 150. Was it 150? I didn't look at that part. 150. There you go. So weighted moving average, and you can see that's kind of the biggest swings you're looking at, and you're looking at, okay, we've come back above there, we're getting supported again. So we could be the fact that we've had that one push up, that one sort of corrective phase down to 59.80, and you've got that expansion. The fact that we're just under that 60.33 on the open, and I see it two ways. I like to watch the open. If you're trading the SPY, watching the open is kind of important. If they flush through that level right on the open, that to me is not going to be bullish longer term because they've squeezed out those buyers already. So what they prefer to do is squeeze that out, get them long above the level. The breakout traders on the open, people that leave their orders in, stops or whatever, squeeze them out and it turns around and heads back down again. But the fact that it's sort of opened up and flushed down and then started supporting an inside level off the MAs, that to me is going to get some sort of action like this, an expansion higher, contraction, expansion higher, which played out quite nicely. It's just, if you're going to trade it, you're sort of looking to see a couple of touches. Sellers, if these MAs are going to hold, we're looking to hold off that. You want to see high lows hold, and you can buy the break. Your break would have been around 60, 15 thereabouts with 10-point risk or so. Probably you didn't need that much in hindsight, but that would have taken you down here below this little minor, if you can see that, this minor high low in here. And it did. It played out quite nicely. It triggered some buying action. We're working our way up. At the moment, we look like, okay, we're extended. So when you get to that extended level, it's going to be more of a complex correction on this time frame. And this is only a 5-minute time frame. So you're looking for a complex correction. You're not looking for it just to keep going up, and you're not looking to sell on the break there because it can chop, and then up we go again. So you're just going to be careful when you get these sort of extended moves up that haven't really paused much. I mean, on that 5-minute time frame, you've got this base building, high lows holding, and then expansion up. You want to be part of that expansion. If it starts to pause, you can tighten your risk up. If it stops you out, it stops you out. If it doesn't, and it looks to keep going, then you hold. Right? And if you do get chopped around and you think it's still going to keep going, you're just going to wait for potentially another setup long. But just remember, by the time this is kicked off, it's no more the unknown, it's more of the known. Right? Meaning that it looks like it's going up, but it's kind of bullish. It's a bullish day. Anyone that's going to get long and hasn't is going to get long up there. But most people, most of the pros would have done it earlier in this area. So how much more can it move? All these sorts of things. I've got to weigh down because that there's going to be some buying in the session and sell off into the close potentially, or some profit taking for your intraday traders into the close. So a few things you've got to weigh on your decision making when you're getting. This is more the unknown because you don't know what's going on. And just what we spoke about, holding off the MAs, that's the premise. Holding off the MAs, you've got high lows play out, you've got your break. Okay, as it starts to rally, you start to become right. There's other people that are waiting for more confirmation, potentially looking for it to sell off at that level 33. It doesn't, it goes through, they dive in, maybe late. So everyone that probably wants to be in is either in or looking for a real, a small setup, and they're going to take a hell of a lot of risk when they're the last ones potentially to buy in that move. Not saying it's the end of the move, but anyone that's been watching this from the open, if they're not in here and they're in late, either way, you're either in early, you're in late, but pretty much used up all the juice. That's the way I think of things anyway. If it's used up all the juice, how long is it going to go higher? Just go straight up again from here. It's a big effort. So more likely you're going to get that complex correction if it starts to hold some sort of, it just needs to clean out some people, maybe something like that if it comes to retest that zone, and then you might get this little go here, spike up into the close. And we might finish on highs another 10, 20, 30 points higher. That's what I'll be looking for, if that complex correction to retest this level maybe, and then starts to hold inside level again, something like this. then there could be another trade on our cards later on. But I'm not a big fan. Once the SPY moves, it moves, and it sort of doesn't give you too many opportunities. Just to go over Wall Street, we spoke about that. Just to go over the Hang Seng. So this is a trade on the Hang Seng, and this is where you be careful. Anyone that does trade it or is learning to trade it or is interested in trading it, intraday, it gives up some really good trades. Okay, but it can move fast, and you've got to be on top of what you're reading in the price action and all your entries. But the thing is, if you don't worry about the fear of missing out on something like this, and it's hard. For instance, if you think it's going to go higher from here, you just buy the dips. You got to wait till it starts to play out. So this for me is where I got in. I got in just in here. Right. Again, sorry about couldn't alert that out. It was just a bit slow. But you're looking for zones to hold. So support down here we've marked up earlier. You can see longer term you've got this sort of contraction. This is after that big move down on Friday that we spoke about that. I think maybe we spoke about that. I'm pretty sure we did speak about that, about it moving down, continuation or that further expansion on the 30-minute charts. If I haven't, there's a video that's coming out in a minute. Well, hopefully this afternoon I'll put out. It's got to do with, it's the first of the 3-part series I'm going to put together on expansion, contraction, and consolidation. The 3 sort of phases of the market, and this was a good example we were just speaking about. I spoke about on the weekend, in the video on expansion and what are the key things you're looking for. So, touch on that, then that means you've got contraction. Contraction is not kind of a market you're going to get any sort of trend in, and you've got to be careful. Legend, Shibello, short on the ASX, 90 points over my position. Nice, short, 90-point gain. Right, so you got this contraction phase, and it's starting to hold. So it's traded through. I don't mind the trade through that support zone. Held again here, reacted up, and then you're starting to break down. This is kind of the resistance we're looking at. All right, that through there. Then it started holding this inside level, started to lift, and that's where it closed. So if we go back here, this is where it closed early hours of Saturday morning. What was it? 4:59. So it's basically right in here. All right, that's the close of the session. So all this sort of fluff here was just the CFD pricing on the open, and then once it actually opened, you can see smashed down here, retested those lows. So it's still holding that contraction phase lower. So you're going to be looking at that. If you're thinking about going bullish, you're going to remember that overall that could easily break down again off a lower high, break down and go. But once we started getting this action, jamming up off that level, okay, come back into that level, jam back up. We've got this action here. And then we come back in. So I was watching all this thinking, well, if we do hold again after this big flush higher, and we started, you can see here, we just broke up and out of that maybe consolidation contraction. So there's a good chance we're either going to go sideways. It's going to be more of a range bound action of support and potentially this zone in here. All right, so we're going to get potentially that sort of range bound action, which you can trade off easily enough. So just watching the kind of nerves kicking in a bit. Yeah, it's not easy. None of this stuff's easy, is it? I hate that initial trade where you think, am I right or am I wrong? When you just get in and when it starts to expand in your favor, it's such a nice feeling, isn't it? And then it's just about managing your risk. The joys of trading. Anyway, so we're looking at this level holding, and then it starts to break up. You can see here. So that way, to me, once it does that, right on this candle here, if you can see, on this, that's just not a very good picture. Right on this candle here, I want to draw that a bit nicer. That's not it either. There we go. Let's try that. This is the candle I'm looking at. Once it breaks up there and you got the next candle expands higher, you know that, okay, potentially a breakthrough 24,240 is off the cards. So that's my mindset at that stage, looking at it thinking, okay, maybe that's off the cards. Maybe we're going to contract here, hold an inside level, and bang, up we go through 464. So that's ideally what I'm looking for. So I was actually looking here to think if we hold here and we do something like this, we pull back and then we go, I'm looking for a long, and I'm looking for that squeeze back up through those highs. But it didn't play out. It came all the way back down here and started to fade again, 24,240. So it's just, it was enough to really throw sort of that what do you call it? Not concern, that uncertainness into the market. And the fact that it's held again and started to lift, this little 3-candle rally on a 5-minute chart, or sorry, this is a 1-minute chart, was kind of important, because I think, well, even if we're range trading, we're not going to trend high, we're not going to trend low, we're just going to range trade. I'm pretty confident this is the bottom end of the range at 24,240. This is my higher low after we ground down. We've held at 1-2 from the open. We opened there, bang, straight up, retested, held, had to take it, once it gets all the way up here, it can't get through. Sellers were thinking, can't get through here, we'll take a deeper one, a deeper move. It comes all the way down, and you can see the way it was coming down that in 1, 2, 3, 4 waves, and then getting held up again. 4 waves down shows you that buyers are stepping in. Okay, so you got to take note of that. High low in here. Okay, it was basically a matter of entering through that. It was about here, 47, I think it was, or just a couple of points higher. No, 43. I think it was a 43 entry. Stops was below, and then you just got this run up here. I took it, stupidly enough, took it off just into these highs, which, we're coming into. I had to get some work done, but that just pulling out 50 points. I think it was 50 something points on that. It did go higher, but ultimately, we're starting to get a bit of a sell-off now. But you can see the premise. If we're range trading, we don't expect after Friday to get that another trend day. And the fact that if it was going to trend, it's going to go down. The fact that it's starting to hold up at this zone here is a bit of a heads up. Maybe we're not going to trend, looking for a range, or we're looking for some sort of expansion higher, essentially. And if I'm getting long, I'm either going to get the range, get stopped out, somewhere up here. Say we traded it, so I was trading it properly, stopped out somewhere around here, and then watch this, and you've got this retest of that high, and then we're starting to come back down again. So maybe it's going to be more of that range bound action today on the Hang Seng, coming to 1 o'clock anyway. So does that make sense? Just walking through that trade, I thought it would be interesting to step through. So what we'll do now is get rid of that. We'll get into the overall markets. So we'll go to the dollar's the interesting thing. Okay, so we've got longer term. We'll go to a 4-hourly chart. Down here's that level we've been talking about for a while, 92.50 thereabouts, and that's that longer term. Just go to a week. It's that longer term move up here. It's potentially holding. Okay, we don't know if it is. We don't know. It hasn't confirmed anything just yet. We've got essentially a retest fail, we call it, or a double top. But the double top's not confirmed either, because once, we've talked about this a few times. If you confirming a double top, that's your trend up. Okay. What I want to see, a double top, is a few key points. So we're at about that phase there. For me, to at least identify a double top, it has to break the anchor, and that's what we did there, which is this move down, through here, broke through that anchor, and we're back up again. Okay, so it's a double top potentially, or that's just part of a correction. We're going to go back up and blast through this 103 zone up here. So here we don't know for sure. So what I'd ideally be looking for is just that lower high. Okay, once you get that lower high come into play, so we might bounce, get a lower high, and then if that comes into play, I would expect to push through 92.50. So we might be getting that at the moment. Good place to bounce. People will be looking at the same thing I am, looking at this double top. It's how you interpret it all. What I'd be looking for here is potentially a bit of a rally off here, because we have got maybe not as much stimulus as we thought. That whatever it is, if there was going to be more, if everyone's factoring in 600 rather than 4, okay, we didn't get that, we should be bouncing. Okay, so but either way, people are factoring in stimulus. It's been talking it up for a long time now. The risk was that there was going to be no stimulus, and I would have expected that US dollar to really bounce hard and squeeze out any sort of that negative move down on the dollar. So for me, I wouldn't be surprised here if we get a bit of a bounce. Squeeze out some of these shorts, and then I think the longer term picture is going to start to play out a bit better. It's whether we get a shoulder starting to play out here, and we start to fail at around 96 or so. If we start to fail at 96 and start to head south, that to me this is going to play out here. And once you get that playing out, after you break the anchor, you fail off the previous high, which is up here at 103. We failed off there, and we've got this shoulder. The shoulder means sellers are coming in, and sellers are looking at exactly this and looking to come down. And that's, to me, we're going to move down to at least once you get that shoulder come into play, at least we've got a move down to at least 92.50, or no, sorry, potentially to retest 87.77 from back in, what was that, January, end of January. Does that make sense? So this is how I would play any sort of double top. You trend up, failure. If it's going to trend again, it should have gone through that high. Okay, once you break the anchor. So now if you don't break the anchor, it could all be part of, I don't like to say nothingness. If you sort of, it's a bit different when you got a trend up like this, and then you get some action like this. We don't really break. That's going to sucker in a few traders. You come back here and then blast off. So we haven't broken that anchor in here. That's the new anchor, and it's just continuation of that trend down. It's just this sucker lower high. It drags people in. They see a lower high and they panic. It's got to do with the anchor. The key information you've got to see is from the anchor, and what happens to the anchor. Do we flush out that level? If we flush it out enough, and then we start to fail at previous highs, key highs, then what's next? What's next? If I want to see a down move, I want to see a shoulder hold. I want to see a pullback from here, shoulder hold, and then see what happens from there. And then I would expect downside movement. If we start to lift from here on the dollar, we start to bounce, and we get this kind of action, then I'm seeing these high lows hold as we start to squeeze. Then I'm looking for an expansion back up, and it could be that this is that was a bit of a big correction. We're starting to hold again, and we're going back up on the US dollar. But I think all that's got to do, to me, with the stimulus. What's happening with stimulus is there going to be more stimulus than we think, which I don't expect. I think this could be the last sort of round. If the US and these coronavirus start falling apart, really hurting the economy, which it doesn't look like in jobs, but we're going to see next month's jobs data, because I think within the last month, companies have started to come out of lockdown. A few have gone back. So maybe, expectations were, it's really, really hard for analysts to figure out the numbers. But expectations were a certain amount of jobs. We did a little bit better than that. But if now we're going to start taking into account people going back into lockdown, there might be, some further job losses in next month, which could weigh on the market, which could create the expectations for more stimulus. But we'll have to see how all that goes. So this is what I'm looking at, not this sort of scenario, but I'm looking for this at this stage. I'll just clear all that out. I'm looking for some sort of bounce on the US dollar. Now, key levels for me, we've got a zone up here. It's reacted off. Obviously, got this zone down through here. We might just range trade in there. But if we come up and break through that level and we start to grind back in, then I'm looking for a high low. I'm looking for that deeper correction back up again. And that's going to pressure gold. It's going to pressure a few currencies. Obviously, all currencies linked to the US dollar. US dollar will start to go down. Sorry, euro will go down. And you can see that's reacted down. That's starting to crack. The pound, same. This high up here was already heading south when the news came out. It's extended those losses, still holding up. So a lot of these, back to the euro, a lot of these currencies are holding. So there's a key level there. Just because the US dollar looks like it's going to rally, doesn't mean it is. And it's not being reflected in the euro. If the euro, any euro traders were looking at the US dollar thinking it's going to crack, it's going to rally and they're going to get squeezed out, they'd be out by now. Okay, does that make sense? So we're not seeing any confluence in different markets. We're just seeing US dollar still holding the lows. It's just bouncing off the lows. It's still holding the key lower high. The euro, the same. The euro's just, you got some any of these buyers that bought it up here looking for an extension, just continue on. They've just been squeezed out. Longer term from here, you're still fine. You've probably got your risk will be under this level at 116, say 117. You'd be holding your risk under here. For the sheer fact that if that starts to crack, then we've got a deeper correction on our phase. I'd rather be out, watching, and re-enter if I have to. So that's, to me, is sort of, the picture at the moment. US yen, we're talking about this bit of a rally. That did play out. Just, again, it plays out, was it later at night? That entry would have been right on the number at 10:30, and it started to rally. It's whether this can stick. So what I'd be looking for, we're on the hourly chart. You can see it's had the two moves down, one, rally, two. I'll be looking for from here, if we can start to build again and get a rally and start to push up to these highs. If that's going to play out, because this whole area is going to be a high low compared to this. So you've got, if you can see what I'm talking about, this one move up, pull back, secondary leg up. Okay, so all this sort of analysis, I guess, is based around, that's your first move. So anyone that's short in here, if they haven't closed out, anyone that's looking to get long that didn't get in here, looking for a bigger move, this is the area you'd be looking for. You want to see this hold, and if you break that down, I can't draw it properly. But anyway, you've got these couple of moves down, which is a good sign for bulls. But you just wanted the last sort of key to the puzzle is to hold those higher lows. If we can hold those higher lows, then start to expand back up. I think we're going to take out this high at 106.05 and start to target 106.40 at 50, even above, because all that becomes part of this move. Leg up, equal and opposite. If you clone that and we start to do that, then we've got to move back up to this zone at 107.40. Does that make sense? So this here, keep an eye on that, because it notoriously kicks off. I'll be keeping an eye on this too for a potential buy entry alert. But again, if that US dollar starts to show some signs of holding up, this and it's reflected in which it could be getting reflected in the US yen. Anyone that's short in here that didn't get out here and is watching this now would be quick to jump out, to bail on the shorts and really lock in some gains. Does that make sense? So that's one to start watching on the US yen. Now, what else we got? I just want to go over. I'll go over crude. Crude oil is backing off back into that 40 level. It's really struggling. I want to clean this up actually. We've got get rid of that. All right. So got this zone through here. That was sort of the highs around that 40 mark, 41. Then you've got another level that's held through here. So that's okay. So we've got the market crept up. It started. You can see it starting to roll here. It's come back down, and we've had that launch up through 41, 41.50, and then we come back into retest into this zone. So if this is going to hold up, it's going to want to do it soon, I would suspect. If we've got this, well, maybe it's not going to do it. Looking at that, going across the lows, potentially we could get this bit of a grind up, sucker in some longs, and then turn around and squeeze them back out on a fall. One thing supporting it, crude oil was lower inventories in US inventories. I think OPEC have actually raised output, so it sort of offsets that. So still that uncertainty. I think it's going to be demand if the world goes into lockdown again and we get hit with more virus cases in the US. Europe's doing okay. It's going to be that it's a bit of a mix of opinions, I guess. US, what's happening there, that's probably negative. I know Europe's actually not so bad. China's apparently doing okay. So there could be, that's why we're getting this sort of flat to edging higher action. Nothing's getting too excited. So for me, I'll be looking to see if this zone can hold up. Basically, if we can hold these lows and we start to lift, there's no reason why, if it does break through that low, it doesn't mean we're going to get bearish action, okay, go short. It means that just be wary that we do punch up into these highs. If we don't get a run on, we could get a lower high in respect to this. Up at these highs, we might get longer term action like this, drag in some buyers, extend up, and then start to fail and get a bigger move down. But if we start to consolidate this level, ideally, I don't want to see it start to take off right from here. I'd rather see this action, consolidate around this lows. And if we can start to creep high, you get a higher low to work off, and then start to get that extension up. We might get a run up to these, back up to these highs at 43 or so, and then break through it. I think it's all got to do with what's happening in the indices. The indices start crashing, then we've got a bit of a concern. Views on ETC, BC on daily, not intraday. Yeah, we'll look at that in a sec, Laurent. So that's probably about it. So just over to the one thing. Look at copper. Copper got nailed. It's not a good sign. We were talking about this level here. Sooner or later, that's going to crack one way or the other, and it cracked down once that US dollar started to rally. So to me, if that US dollar keeps rallying, expect us just to really get smacked. All right. So just any copper stocks, just be wary. We might get a bit of a grind up. We might get more extension higher. So all we've got to do again with what the US dollar does, start to get that push to 94, 94 and a half, and so on. Or it's already sort of shown its hand. On copper, it was getting held. A bit of a cracks appeared there, got supported again. It looked like it was going to have another go at these highs. Instead, lower highs come into play in here, holding, lower highs, and then that extension once the US dollar started to bounce. And that was all around 10.30, so that high was made around 10.30. Once the US numbers come out, US dollar rally, bang, down we go. So it shows that there's tentativeness to hold longer term in long positions to hold, because obviously you're watching your gains start to evaporate over the longer term, you're going to question it. And you don't need much of a trigger to get out. You'll find any reason to get out, if that makes sense. All right, so the last thing just going to go over is the major indices. So we've got NASDAQ. I want to go on the daily. Yeah, over the dailies. Oh, actually, not the dailies. I heard a good comment by someone. I just remember it. A bearish candle is not the indicator of a start of a move down, but every move down starts with a bearish candle. So I guess what they're saying is that just because we've got a good red day here doesn't mean that, or here doesn't mean we're going to head south. Okay, the market's starting to break down, but it does mean that a move down is going to start with a couple of red candles at least. So people who's trying to pick the top, just keep away from trying to pick the top. Now, it was someone that was a good chartist. I think was it called the Chartist, if anyone knows his name. But really good quote. So this here, the Nasdaq, even though it finished down, so this is the session when it opened up at 10:30, some selling into there, but it held this zone through here. So look, to me, that could be just reversion to the mean, sucker in a few sellers, and we ramp back up and we go through the highs at 11,280 tonight. Okay, we could easily do that. The fact that we've got up through these highs, let's do that, and we're testing back into them, that could be a false breakout, and we might get a lower high and it comes back down. Or we're just going to chop around here and start to lift. So if we start to chop around here tonight, the next couple of nights, I would expect Nick Raj, that's the one. It was him. It was a good quote. I probably got it wrong, but it was something along those lines. So we start to hold around here. We could be lifting and go up through the highs, and then just that bullish move continues. We've still got, all this rally is still intact. We're on a 30-minute chart. Daily chart's still looking good. It's extended, of course, but it's not the first time it's been extended. Go back to the daily. The trend up has been extended. We've been extended. Look at that momentum, basically sideways, been extended all the way through here. Overcooked, but it just will not stop. It's a bubble waiting to burst. We know that, but if you're trying to pick the top and you've tried here, you tried here, it's a losing game picking tops. You've got to wait till you get the shoulder. And even if something like this, you get that big sell-off, you can't kick yourself that you go, oh, that's the end of it. You got that fear of missing out. You start to sell down here, you get a bounce, you get stopped out, you try a couple of times, you give up, and then you get smashed down. I think it's kind of a good rule of thumb, just wait for the shoulder. If the shoulder plays out on the short side, then you go short. If it plays out on the long side, then you go long, because that's a good heads up that if you think it's going down and the market starts to hold a high low, okay, you've got it wrong. If you think, here and it starts to come down here and it starts to crack, especially this uptrend, and we come back sort of into this zone, potentially down into this zone here, I'll be looking for something like that. If it comes down and then you get a bit of a grind up here, that's what I would expect would happen, especially if it grind off that, especially after breaking this low. And then I'll be looking to, once it starts extending through here, I'll be looking for shorts, because that is part of the first leg down, secondary leg down, and especially with the Nasdaq, with the way it's been buoyed. Is really going to get a move on. So I wouldn't be looking for an equal move down, so that's your projection down, you grind up off. I wouldn't be projecting it down evenly. It could get really smacked if we start to break this uptrend, because there'll be a lot of people rushing for the door at the same time. So that's Nasdaq, Dow. That looks bullish to me on that time frame. We've got lows through here, holding here. We're up at highs. There is a chance that we're going to fail off here, double top, but it looks all set. The more stimulus they throw at it, good old Trump knows what he's doing. Throw stimulus, keep the ball rolling, probably pushing back up to those highs, 29,350. And look at the S&P. We're basically up at these highs now. So we've had all this sell-off, V-shaped recovery, straight back to the highs. So from here, hell of a lot more problems now than when we were way back there, unemployment, all that sort of stuff. But the market doesn't seem to care, because as long as we get that stimulus, we're coming into elections, the market's going to keep trending high. It's trending high because of XYZ. XYZ hasn't changed. It's just going to keep trending. Okay, so why break the trend? If everyone's loaded long, keep buying it up. Sooner or later, when it I would expect to crash. When it does, it'll come crashing down. Again, it's nothing to say it will. That's the thing. You can keep pushing the same barrow or think it's going to head south. And if it doesn't, it doesn't. We're still looking for longs in the indices. Still trading long on some shares if they're setting up. There's a few smaller shares that are starting to play out quite nice, which we'll look at in a second, that look like they could be setting up. So that next tier, you've got the other ones that have bounced off the low, all your favorites, bounced up quite high. They're getting extended. So where are you going to place your money? Maybe they start rolling out of those and they rotate into something else. Or a lot of these sort of secondary level or third level, tier level stocks that have been doing nothing but setting up, holding low, higher lows could be the next sort of tiers to go. So just keep an eye out for some good setups, even though we could be extended. Because if the market keeps going up, then we're just going to get back on board. If we start consolidating, this is the XJR, we start consolidating through here. I lift through these highs. I think game on, we're heading back to sort of all-time highs at 71. Even though the RBA has turned around and said the economy's not great, at the moment it seems to be irrelevant. Great or not great, the market seems to be wanting to go higher. And smart move not to pick the top, but always be wary a top could be putting in place. All right, you just got to be prepared if that happens. And there's going to be a time when if you're loaded long, you could get stopped out of a hell of a lot, chipped out. That's the name of the game. But if it doesn't pull back and it keeps going, then great. You're making money on the way up. So that's it on that front. Let's go over to some shares. Start putting something if you want to look at it. Well, actually, no, Lauren had just before we go, you want to look at, so I have to look at ALL, someone, and I'm going to look at Bitcoin. So we're going to look at it a daily, was it? Daily, not intraday. So daily we're on. So to me, that looks longer term. I am bullish on this, and I'm kicking myself that I'm still not in, which, it happens. Too tight a stop, flushed out in the spikes, whatever it is, it happens. So that's where I'm looking at the moment. So you can see essentially, take out that. This is the zone where it's coming back into these previous highs from, was it July last year, about a year ago. Back into these highs, we might extend a bit more, but I would expect anyone that's sort of bullish here is looking at this thinking it's going to take a bit of energy. Again, we're not in the unknown, we're in the known. The market's consolidated sideways below this level at 10,200 and then expanded higher. Then we jumped on board, made some money on the way up. It's still up there, 12,000 now. Good on you. That's what I kicked myself, 12,000. Anyway, that if we plow through those highs, I'm expecting it to extend higher. But it'd be interesting to see whether we start to fade off that level or whether we just plow straight through. So there's two things you want to see. If it goes straight through, you want to see what happens on the first pullback. And you don't want to just see go through a level by a few points and then come back in quite a deep retracement, because that, to me, I would expect we're going to get that. But if you start to jam up and through, and then we get slightly different action back into there, and we're coming back into this zone off a secondary movement, because if you don't go through very hard and you start to get a secondary movement from underneath support back to support, it's a different scenario than your secondary movement back into that support zone. Does that make sense? So this first instance, you've gone through, you pull back within the zone, you've come back to retest it from underneath, it's still resistance, and you're failing off it. This one, you've gone through, you've come back into that zone, probably haven't drawn it too well, come back into the zone, you're retesting it from the highs. And that, to me, is more bullish sign, that you're going to retest it and go. All right, so if we get that, then you've got to go long and see if we get that run up to, what everyone's talking about, up to 20,000 and so on. So we're getting into those key levels at the moment, up to maybe 12.6, another 600 points. If I was going to go long, probably off the daily, you could probably do it about now. Just stop just below, it's a 1,000-point stop, but you can manage your risk through the CFDs and see if you can get that move up and through. What happens when you get to 12,700? And if you want to manage it a bit tighter stop, drop it down a couple of time frames. That move up there, you can drop your stop down to 11.4, say. Rather than all the way down here, you can have it here. You got your stop. It's broken through this high. You're expecting it to break through the highs at 12,100, and away we go. That's a shame. I would probably alert that for a break there and have we stop at 11.4. So, yeah, that could go through now. And the fact that we've spent time consolidating under that key resistance zone leads me to believe we're going to extend into it. So even if you're jumping on board now, and you got a nice wider stop to start with, you can tighten it up as we go, as we get those high lows start to play out, and you go into new high, you just tighten your stop up below the high lows, I'm thinking we're going to get that extension to 12.8. So I would see that it's going to flush out those highs, because that, if the market's sort of gunning for there, it's going to drag in some late buys on the stop above there, wide stops, and if it's going to come down, it's just the fuel they need to retrace. Does that make sense? All right, you still long that? Now, I wanted to go over ALL to start with. So someone's asking me about ALL. Oh, sorry, with BTC, I think Ethereum is going to be the same sort of scenario. I forgot about that one. Ethereum. Yeah, that the flush down here and we start to hold this inside level is a good sign. But if you go long before the break, then it's a sign that we could also, that's a resistance zone. Right? So there's that sort of thing. You go long now, anticipating a breakout, which you haven't been confirmed yet. Yeah, it will look exactly. EDC, probably a better risk reward. I think a breakthrough here, I'd have a stop below the most recent high low and see what happens. So I might actually alert that. Just keep an eye out. I think if that's going to go, if Bitcoin's going to run, that should go with it. I think because everyone will be thinking the same story. Bitcoin's just, lack of sellers and it's going up, and you're not getting some sort of confluence in Ethereum. Maybe Bitcoin is not going to do too much, and you're a bit late to the party at the moment. But if you're looking for a buy on the break for extra confirmation with your stop below, because if you get the buy on the break and you get stopped out, okay, it was never going to happen. Because if we go through that zone, through here, and that turns around and stops you out below here, you could probably assume that it wasn't going to work anyway. Because if that was strong, it should have just plowed up a lot higher. You would expect you get that extension higher, ran out of steam, you got your first pullback, people buying the first pullback above that level, and off you goes. Just what we spoke about before on Bitcoin. You want to see that sort of thing, plow higher, maybe your first pullback starts to get supported, and we get that kind of action. And then you're fine. Your stop's in the right place, and then you can start raising your stop to break even, lock in some minor gains, just depending on where it goes. Right, so that's the scenario I'd like to see. If we buy on that break there, you want to see it plow kind of high, and then you're expecting your first pullback to, if it does get supported, then so be it, good, and then just follow it up with your risk management. If it doesn't, then what do? Then you've got to risk getting stopped out here. If we start to hold a lower high, then you might just want to be thinking twice about it. All right, that's that. Now, just before I continue, I forgot, tomorrow I'll be doing a talk at, I think it's 12 till 1, 12:30 to 1, 11:30 to 12:30. I've got to remember the times. But it'll be it's a new TV show. I'll see if I can find the details. And I'll whack in the chat. Just give me one moment. I'm going to find some links. Spotty, I think it's called. So go and find a thing called Spotty. I'm just going to find, where is it? Anyway, let me just find, here we go. Paste. Check that out. Don't know who that is. So that's Spotty is what it's called. I'll be on there as a technical guru tomorrow. And then there's, I think, the guy from Motley will be on there. So it's a good little program. I think it's 3 days a week, Monday to Wednesday. The guy's a really nice guy. Elio, his name's. And he does that, it goes for an hour. You can ask questions on some stocks. It's a bit like sort of what we do here, but more based around just ASX. But it's good. It's worth watching and linking into. So we'll be doing that. I'll be doing that tomorrow. So just keep an eye out for that. Now, so ALL was where I was. ALL is this one here. You can see it's got smashed down, excuse me, with the daily there. Nice that it's held in here. Okay, nice that it's just held in here. Actually, speaking of the devil, he was just ringing me then. Just give me 1 second, guys. I'll just quickly answer this. Call in 30 if that suits. All right, so we'll just go over to this one here. 6 months. So we've got this price action, which I kind of like. Screen snapshot. Got that there. All right, so we've got the good thing about this, it's held up. I want to do that again. Sorry, I don't like that. I'm just going to a bit more data, makes it a bit clearer. It doesn't make it too clear. All right. Discard. Aristocrat. Here we go. All right, so we've got, through the highs there, it's gone through the highs. All right, so that high, I mean, this is, if you're looking at this, for instance, back here, or you're looking at into this zone, that's a good little zone to buy, because what I'm seeing here as it gone up, it rallied and then failed straight away. And that's where you took out a couple of these lows. You took out that low with that little rally. So if that was a strong market, and here you're looking to buy, and your stop's not below here, and then we come down and tested another couple of times and got through slightly further. So, but at this stage here, when it comes down through, then you pop, and then you start to get this lower high come to play. I'll be tightening my stop up there, because you don't know if it's going to head straight back down to these lows or what it's going to do. All right, the fact that, and it's also just a minor break of those highs. Now, just remember, if a stock's strong and you're going to be right, you're going to know it fairly quickly. You don't, most of the time, or generally, you're going to get some signs within the next couple of days, or you're going to get maybe that day it powers through that level, powers through, just goes bang, and finishes on its highs. That's a good sign. If we get through that level, and we sort of, the next couple of days we pause, last thing you want to see is a push down through these anchor levels to that uptrend, which was down here. Okay, which is pretty much exactly what happened. You don't want to see that. All right, so if that's the case, I'd rather be out and watching it. And I think what's happened since, once we got these highs started to hold, that's the reverse. All right, so we're going, if that was going to be weak, you should have gone through that with a bit more oomph. The same here, you should have gone through. So it's just taken out the lows by ever so slightly, and it was coming back into that range. So for me, that's a good sign. So when you're starting to look at it here, and you've got maybe something like, let's just clear this up. You're starting to look at it through here, and it's starting to get soaked up here, and then you got this break. This break sort of coincides with this zone through 28, and I'd be happy to take that long. My risk could be just below, you've got a $2 risk, which is next to nothing, and that there is all potentially, so that should move higher. You're looking for expansion, even if it's just off, 20 for instance, up to 28. Off that low from 24, another 8 bucks takes you to 32. You might be looking at, and if that coincides with any zones, it sort of coincides with that low, you could be looking for a move, back up to here, another 3, 4, 5 bucks. Sort of at the minimum. If that's your first leg up, your second leg up. We're being conservative because we took it off this low. Take it off that low, you can add another few bucks, and it's probably up to these highs around 38. Okay, so in essence, I think that's your one. We've consolidated, had a pullback. That consolidation through there is important, because if it was negative, and there would have been a few buyers that bought it up in here getting squeezed out, but someone else is accumulating here, lifted, accumulating through here, or someone new is accumulating for a move back up, they're probably gunning for those highs, potentially around 38 for that move to extend. So I think there's some upside into this. Looking at the weekly may paint a different picture. We'll just get onto that. No, so I mean, even that, it's starting to look, got through those highs today, look for a bit of a move up. It's just that we might get up to 30. We might have to pull back to retest the MAs, consolidate a bit, and then go, something like this. Actually, we might get something like this. So he has pushed up, we pull back, we've got through the MAs, might consolidate, it might just consolidate around here, 28 to 30, chop around here, and then start to lift like we did back in early last year with this secondary move up. Right? That's just based off that weekly. But I think the way things are moving now, they're moving off the shorter term time frames. They're going to go. People are going to chase it. So just bear that in mind. 80 up 82 at the moment. So it could be that the XJ is going to gun for those highs at 71, 7,100. But again, that's going to break through the 62 for me. In my mind, if we get through 62, then all this is just bouncing off the MAs, and we'll be looking for the first pullback to try to get a lot more shares on. The other things I want to look at, if there's anything you want to look at, just put it into the chat, and we'll go from there. PRN, something I've got my eye on, but there's a few things that I'm not too keen on. I like the structure. I mean, the structure is important, and it could be that it's not ready just yet. But, all right, so we've got this kind of action here. All right, you can see that's clearly it's holding. Now, obviously, if we break down through, or whatever that price is, was it $1.15 through here? If we break down through there, that trend up is it's under question. It could be starting to break down, but I like the fact that we swung up here, lower high coming into play, corrective action down. We're starting to hold in here. So to me, it's this level around $1.30 that's sort of key. All right. If we're going to break up through there, it got rejected here, which is a bit of a concern. But it doesn't mean anything when we start to, you break it there could be some bears coming into play, but they get soaked up again at $1.20 on this little low here. Starts to lift again. So if we start to lift through, again, it might not be a bad little break there. You stop below, say around $1.20, not a lot of risk at all, say 20-cent risk, and you're looking back up to these highs at $1.60. All right, so that's probably going to be somewhere around the ballpark of 2 to 1, even 1 to 1. If it starts to fail, so be it. But if it goes 2 to 1 and it looks like it's just going to jam through those highs at $1.60, you can just keep running your risk behind it. All right, so that's that one. OPY is something I know a few of you got. This to me, this overall pattern potentially is playing out like this. Previously it's just going to rinse and repeat. So this OPY again could be a good little one. And knowing nothing about the fundamentals of it all, I know there's a few people that do look at that and are saying it's quite good little stock. If you take it, that's the pullback, and that's what we're looking at. Then we're looking for that higher low. But even if you take it across here, you're sort of through that $4 level, through this high, that zone there, sort of as your entry. It's just we just want to, if it plays out from here and goes straight up, then you've got your risk below that, a 50-cent risk, say, for example. 50-cent risk, you're expecting to move up through 5. You're going to do this kind of thing, a power move up, straight through 5, and on we go, on and up. Maybe you can go a lot higher, but I just wouldn't mind a bit more time for that to play out, chop sideways, a bit like this. So this is the action that I would prefer to see. Chop sideways, meaning that anyone that's going to sell is going to get more confidence to hold. And if we start breaking the upside, that's going to bring in anyone that's looking to get in. It's going to drag some buyers in there, you would expect. Right, so this is, I'm sort of leaning towards not really that resistance. I mean, if this one holds, say this resistance down holds and we start to sell off from here, there's going to be potentially a bit of a problem. We could get a major sell-off through 3, but that longer-term trend is still up. So it's coming to that point of agreement. It's coming to that squeeze between buyers and sellers. You don't know at this stage, from a technical point of view, who's going to win out. You've got enough, it's not a heads up that this is a good stock. It's been a hot stock for a while. You've got the good run up there, secondary run up. So it's had 2 good solid legs up, both being sold into quite hard, and have had to spend a lot of time contracting or consolidating. So you have couple of 3 days run, 3 or 4 days run here, and then we spent the next month or so just holding. All right, so it's happened twice. Longer term, it's not. If anyone that doesn't know about it, you're either just not interested in stocks at all, or you haven't read anything, because it's been all over the news. Well, not the news so much, but Twitter. All your intraday traders are trading it. A lot of other people are trading it. It's not the unknown; it's the known. It's just that if we can start to break that 4, I think anyone that's probably missed out at once, twice, or anyone that's been in here, flushed back out. It might have been in here, flushed back out. Or if you longer term trader, that could be somewhere to add. So there's a lot of things that could be working together, reasons working together, where it could be a nice little buying opportunity. I'd just love to see that. Ideally, that consolidate through there. And then if it starts to lift, we get this volume increase as well, then great. We could, I guess, expect that kind of move up again, which could take us straight through 5. But if we don't, so this is the kind of move I would be, if we get a break, something like that, finishing your highs, the next day we do this and then go back up, I'll be just trailing below the days and just see. I mean, trade off the daily, but looking down to the 30-minute, 1 hour charts just for key breakdowns at key inside levels. So this would be that if we get say an entry at 4, just above 4, your first zone will be say 430. As if it starts to back off through there, we know we've probably got some sort of issue. All right, but that's OPY. Anything else anyone wants to look at? We've got Mesoblasters kicked off. It stopped out of WGX, which is a shame. Some of the Goldie stocks are not doing so crash hot. I think it's buy the rumor, sell the fact. Gold rallies. People run out of buying power into the shares. They back off on Friday and back off today before gold's actually pulled back. So I think if gold starts to consolidate and hold levels, current levels, there could be a few Goldies starting to, anyone's missed out, potentially like ourselves, looking to get another entry long. And Mesoblast, that last one, I'll go here. That's looking really good. It is extended on the daily, potentially extended on the weekly. I'll just get over to that. Getting, it's not extended, but it's getting to the realms of getting extended up here. So you can ask yourself, how many more people are willing to buy that up? Where could it be going to? Am I willing to hold the ride up to potentially 6? You got these inside levels. Keep moving my mouse. Just gone through 450. Great today. We'll see if they can jam a bit higher, but I'm happy for now just to keep raising that risk slightly. Legend Laurent, well done. So I'm happy just to keep raising that risk. All right, and it's generally going to be on a lower time frame chart. Just go to the 30. So we have raised our risk today. Makes it look stupid at 32. Just below this little minor level, we've got that expansion today. So I wouldn't mind seeing what happens into the close, see if we can raise it again. All right, so the fact, I know it's not technically trading off the same chart, but we're not in a market conditions where you can be out and out bullish on the market. The market's not out and out bullish. It's been supported by stimulus. That the rug's going to be pulled sooner or later, and if it is pulled, things will come crashing down quite quick. So I'm not willing to run my risk off a daily chart, have quite a wide risk to when you've already locking in. I think it's up 30% for us. So when you get sort of those gains, I'm trying to protect them at the start. Give it a bit of room to move. If it doesn't move, okay, you're out. If it does move and it starts to kick on, the harder it goes, the tighter I want to raise my stop. If it's a bullish market and we've got, it's just been trending higher like it was before the sell-off, then you can afford to give it a bit more room because everything's well entrenched. There's no reason to sell. But at the moment, there is reasons building up to sell. This overall market, it's just whether it does or not is a different question, in my opinion anyway. Probably overly bearish, but I think that's a protection mechanism at the moment, or an opportunistic mechanism. SLC, let's have a look at that. It's one that I'm really not liking at this stage. Done absolutely nothing. BKW. Again, that could go. I don't like, this kind of, and maybe it's just that's what the stock does. You can see it's done it here, chopped around, breakout. Chopped around here, broke out slightly. Again here, broke out. It's not, the problem is the breakout moves are not as big as what you would expect. So that's the concern, that it's running out of puff. And look at the volume ever so slightly coming off. So yeah, extended on the weekly. There's technically on the daily, yeah, you can buy it through 17, but looking at what's happening and on the weekly, sooner or later it's going to run out of steam. If I think that's going to go, I don't want to see a minor breakout like this, especially in this level. You've got this inside level here. You can see inside level breaks out and comes straight back in. So it's, say, a few cent breakout, and it's triple that on the pullback. So I don't like that so much, and I would expect if it breaks out at 17, your stop's going to be below 16, obviously. And if we just grind up, sooner or later, I think that could come smashing down because it's going to run out of steam going long. Run out of steam going long, people might want to lock it in. SLC looking better today. It's to the upside. That 120 is a concern. Today it looks good. Doesn't mean that it can't go. We could smash straight through it in a couple of days. Just drill that in. And it's all because of, it failed here, backed off, supported in here, went straight up and through, failed, backed off again. All right, so we're long from 13.5, I think. 13.5. We've been long for a while now, it's done nothing. But the fact that it's consolidating here, we've got our risk around 102. I mean, if I get done on that, I'm expecting from here we're going to go straight through those lows, because that becomes, to me, a double top. And it's that action. If we SLC, all right. Yeah, double top, we've got push up. Well, I'll say your anchors here. It hasn't really broken the anchor though, so that's another thing. Just pull back here, starting to get consolidate. Levels through here now. You want to see it's broken up through here. Now, this is what I'm concerned about, is that we get the lower high, confirms your double top, expect to move back down to 95 or below. And off that could easily trade that through 95. I would expect if we start to hold this as a lower high, we're going to go through 95, or we're going to at least test 95. I'd rather be out and watching it, because I don't like the fact that it should have gone there, in my opinion. And if it doesn't, okay, I'd rather be out. The fact that that hasn't played out just yet, and we've got this kind of action. If we can get up to 112.13 today, I would expect that this is a line in the sand for bulls, and we're going to trade back and through 120. So still looking good. It's just, I think it needs to prove itself today, at the latest tomorrow. If we don't get up through, if we start opening tomorrow, we finish on the highs or around where we are now, 111, 112 today, we're back off tomorrow. I'm concerned it's going to break through 105. But if we can get up through there today into the close, bullish market you would expect more than where we are at the moment. I would expect it to break up into the close. If it doesn't, I'll be just watching that closely. Last one, APT, what are they doing? They're going again. And Zip looks, I like Zip better, because it's come back down to here, back to the EMAs, consolidating, holding. A break up and through could kick off. Let's just go back to, what am I on daily? Go back to here. Weekly. It's extended on the weekly though, so it's a tough one. You're buying off that daily on a break here. Okay, so be it. You want to be pretty quick to get out if it shows any cracks. All right, what I might do, guys, is finish it up there. I just gone over the hour, so we'll finish it up there. Now, like I said, tomorrow, I'm not sure that I'll be doing the 9:40 session. I'll see if I can get on, but just watch out for the alert. And we'll talk about the overnight markets and what we're expecting for the intraday action again. So just watch out for that alert. You'll see it. I should be able to send it out around the 9 o'clock mark or anyway, or earlier than that. Hopefully an hour in advance. If we're going to do that, then I'll be doing a talk later on anyway. So yeah, if you need any more info, just email support@tradesetup.com.au about the spotty talk, and I'll try to get whatever I can out to you for when it's on and all the times and things. So if you can't find it on the internet anyway. All right, guys, enjoy your day. Remember, if you do like what you hear, it'd be great if you can leave us a like and subscribe to our YouTube channel. So any time we do go live, you will get that notification. And now I've figured it out. You should get a notification in advance that we're about to go live from YouTube itself. Just a bit of a heads up. Anyway, guys, have a good day. We'll speak to you again soon. Enjoy.